All right, welcome to The Explainer. Today, we are diving deep into a massive, multi-billion-dollar bet on Bitcoin made by a single company, MicroStrategy. Now, this isn't just any investment. It's a high-stakes gamble that has some people worried it could impact the entire crypto market. Let's get right into it. So this is the big one, right? The question that keeps a lot of crypto folks up at night. Could one single company really bring the whole market to its knees? All of that fear is centered right on MicroStrategy and its founder, Michael Saylor. And the worry is pretty simple. If they go down, could they drag everyone else down with them? And here is exactly why people are so on edge. Just look at this number. MicroStrategy is sitting on a hoard of over 640,000 Bitcoin. To put that in perspective, that's more than 3% of all the Bitcoin that will ever exist. It's an absolutely colossal, unprecedented bet for any public company to make. Okay, so let's get into the weeds of this billion-dollar fear. The nightmare scenario that everyone talks about is this idea of a forced liquidation cascade. The worry is that one big price drop could set off a catastrophic, market-crashing sell-off.
Here's how the story usually goes in most people's minds. Bitcoin's price absolutely tanks. A lender panics and issues a margin call. And then MicroStrategy is forced to dump its entire Bitcoin stack on the market. You can just imagine the domino effect that would create. It's the kind of thing you see in movies about market crashes, right? A terrifying thought. But here's the kicker. Is it even possible?
Well, this is where the popular narrative kind of falls apart. When you actually peek under the hood at their finances, a totally different picture emerges. Turns out, that popular fear might be completely off the mark. See, this is the crucial part. It feels like everyone is laser-focused on the wrong thing. It's not really about the price of Bitcoin at all. The real story, the thing you need to understand to see the real risk, is how they borrowed all this money in the first place. And this table, man, this lays it all out. Their debt is mostly what's called unsecured convertible notes. Now, that word unsecured is everything. It means there's no collateral. No lender can just swoop in and seize their Bitcoin if the price tanks. And look, right here, zero margin calls. It's just not in the contract. It's not part of the deal. And hey, don't just take my word for it. We've got researchers from BitMEX, a huge crypto exchange, who've looked at the very same agreements. And they agree. A forced liquidation is incredibly unlikely. So, the market's biggest fear? It's basically a ghost story. It's built on a complete misunderstanding of how their debt actually works. Okay, so if a market crash won't trigger a margin call, what is their actual strategy here? Because it's not just buy and hope. Oh no, they've built this really clever financial engine they call the premium flywheel.
It works like a four-stroke engine. First, their stock trades at a premium, meaning the market values the company for more than the Bitcoin it holds. Second, they take advantage of that high valuation to raise more cash by selling stock or debt. Third, they use that cash to buy even more Bitcoin. And here's the brilliant part. Adding more Bitcoin to their balance sheet increases the amount of Bitcoin backing every single share. And that's the genius of it. It creates this self-reinforcing loop. Round and round it goes.
They're so serious about this cycle, they even invented their own metric for it, BTC yield. This is their North Star. They're not chasing quarterly profits in dollars. They're obsessed with growing the amount of Bitcoin behind every single share. That is the game they're playing. But, no machine is perfect. And this flywheel has a potential point of failure. There is a real risk here. It's just not the big, flashy one everyone's talking about. It's something much slower, much quieter, and maybe even more dangerous. So let's just put this side by side. You have the myth, this sudden, catastrophic liquidation event. But the reality, the thing you should actually be watching for, is this slow bleed they call death by dilution. It's a much more plausible threat.
All right. Death by dilution sounds pretty grim, right? So what the heck is it? Let's walk through exactly how this threat could play out. Okay, imagine this negative feedback loop. First, Bitcoin's price just goes flat. It enters a long, boring bear market. Then, that premium on their stock, poof, it vanishes. Now, here's the problem. Their debt bills start coming due and they need cash. So they're forced to sell new shares, but at a rock-bottom price. This is dilution. It's like having a pizza and being forced to keep adding more and more slices. The pizza itself doesn't get any bigger, so your slice just gets smaller and smaller. It's a raw deal for existing shareholders.
And we're not talking about some distant hypothetical future. Between 2027 and 2029, they're on the hook for about $5 billion. That is a mountain of cash to have to come up with, especially if Bitcoin is stuck in a bear market.
So all of this, it basically leads us to a fork in the road. There are two potential futures for MicroStrategy, and man, they could not be more different from each other.
And this chart really paints the picture. In the bull case, if Bitcoin goes to the moon, say over $250,000, the whole strategy is a massive home run. The stock soars. But in the bear case, if Bitcoin just languishes below 40,000 for a long time, that death by dilution scenario becomes very, very real, and the stock could get absolutely crushed.
And really, when you boil it all down, this entire company, this entire multi-billion-dollar bet rests on the shoulders of one man, Michael Saylor. He's the founder, he's the chairman, and with almost 47% of the voting power, he's in complete control. It's his vision, it's his gamble.
So, what's the big takeaway here? First, forget the sudden liquidation crash. That's a myth. The real risk is a slow, painful dilution over time. Second, the fate of this company is tied completely to the long-term price of Bitcoin. There is no plan B. This is an all-or-nothing bet on Bitcoin, supercharged with leverage. And finally, it all hinges on one guy's strategy. So the real question you have to ask yourself isn't just, do I believe in Bitcoin? It's, do I believe in Michael Saylor?
Hey, thanks for sticking with us through that deep dive. If you found this useful, do us a huge favor. Hit that like button, share it with a friend, and definitely subscribe to Crypto Explorer 24/7. We've got way more explainers like this coming. We'll see you in the next one.